Oil prices are surging as the crisis between Russia and Ukraine escalates. According to analysts, the price of oil could spike to $110 a barrel if the crisis worsens further, given that the market is already facing supply chain disruptions. Oil prices have been very volatile in the past few months. Russia was the largest supplier of natural gas and oil to the European Union last year, and crude prices have rallied more than 80% since the beginning of 2021. Asia-Pacific stocks are entirely in the red, with the Hang Seng in Hong Kong in particular dropping 3 percentage points. European markets were also set to fall sharply at the open. For more on this, let's now go to Han Tan in Kuala Lumpur. He's the Chief Market Analyst at Exinity Group. Many thanks for being with us this morning. Han, as we just saw, all stock markets are plunging, really, and that's across continents. Are there any safe havens that investors can now tap to be on the safe side?
Now, to be clear, what I'm about to say is not financial advice, but indeed, if you look at safe haven currencies, for example, over the past 1 week or so, the Japanese yen, the Swiss franc, those have been among the top performing G10 currencies against the US dollar, again, over the past few sessions, right? Even so, the US dollar index, as we speak, is climbing back above that psychologically important 96 level. It shows that the dollar is still in demand as a safe haven. And of course, you've got the likes of gold, right? Gold back above 1900, its highest since June of last year, I believe. So I think all these price action really points to the risk aversion in the markets, which have clearly boosted safe havens.
Absolutely, risk aversion. And as you say, can oil really hit the $110 a barrel mark if tensions were to escalate? And given that this is also coupled with a tight market for supply, but also very high inflation, I mean, what should policymakers do at this stage in the short to medium term?
Right. Let me address the first part first. So from current levels, the short answer is yes. I fully expect $100 Brent to be well within reach, especially if there's an escalation here over the perhaps coming hours or days. And you're right. Even without this escalation, the market fundamentals have pointed to a tightening market, which is creating a very supportive environment for oil prices. As for what policymakers are doing or can do, look, I think we are seeing it already on the demand side. Central banks in major economies have been hiking interest rates, or at least preparing to hike interest rates. And then as for oil supply in particular, we have seen the Biden administration, releasing strategic reserves. So these are some of the measures that are being rolled out on both the demand and supply side. But I think ultimately a lot rests on the fundamentals of the markets. As long as demand outstrips supply, I think we could see prices climb sustainably over the near term.